Thank you, Katie, for the introduction, and welcome everyone to this recorded session of best practices for legal billing and getting paid. A little background about myself to set the stage here. I actually started my career as a computer science major many years ago, so came up in technology, and I eventually landed myself in the legal world as a director at a bar association, and from there went to manage law firms of various sizes. And about 10 years ago, created our own little business that focuses on bookkeeping and accounting needs for solo small firm lawyers. So I've been in legal for well over 20 years. I've seen a lot of things as it relates to billing practices. So I'm sharing with you some practical experience that I've seen working with we've got over 300 clients that we work with. So at any time, take that all as a grain of salt. This is what I've experienced. And hopefully by the end of this, you guys can walk away with some concrete best practices to improve your billing and getting paid faster. So the webinar is going to cover, there's a little thing about me there. The webinar is going to cover topics that all relate to billing and basically cash flow in the end, you know, getting money, getting bills out and money in the door. We're going to talk about some of the technology available to create a smooth, consistent billing cycle. We're going to go over the trust retainer management and how you can set this up in your own firm to manage this and help make sure that things aren't falling through the crack. We'll talk about some tools to bill time efficiently. We can't have billing happen unless we have actual time entries and expenses to bill and making sure that they're accurate. I'm going to spend a little bit of time going over flat fee billing. With some contingent cases, but mostly flat fee billing. It seems to be a topic that comes up a lot. We find with our client base that there is a mix of hourly and flat fee. Very few of our clients do only flat fee billing, but I want to go over that as far as the billing workflow and really more about the economics of that. The other thing I want to talk to you about is, do you have a billing schedule? Are you billing on a set time every month? Are you billing once a month or twice a month? But whether it's once a month or twice a month, you have to do it consistently to train your clients to expect that bill to come in so you can get paid. And then we'll talk about some technology really around making it easy to get paid. What's out there now as far as taking credit card payments or Zelles or Venmos and how we can set that up. The last two topics I want to talk about are the billing metrics. After you're done billing, what reports should you be running to capture what has happened during your billing cycle, knowing how much you billed, what was collected via trust transfers, and then what new AR has been created. And that leads into the last topic I want to go over, our cash flow reports. And the value of those cash flow reports, especially if you're doing everything all the bullets above correctly, you should be able to create a really valuable weekly cash flow report. So the first one I always like to talk about is laying the foundation for your billing cycle to get paid. And the head of the snake here, if you want to say that, is with your fee agreement. And their fee agreements have evolved over the years since I started doing this. I don't think old fee agreements never really covered or talked about billing expectations. We always added sections to cover your fees and expenses, but now what we're seeing is the need to actually have a section in your fee agreement that covers billing and explaining your billing. So I want to go over some of these steps in here. We want to explain the process, what to expect, but in a very simple bulleted text. We want to make it easy for your clients to read this because it's probably one of the most important sections. The first thing to talk about is, what is your billing process? What can the client expect? How frequently will they get their bills? How will they get their bills? Will they come through email? Will they come through your portal? Maybe your law practice management software has a way to send bills directly out through the software. But either case, you want them to know how they're going to receive their bills. You also want to know who in your firm is going to be the billing contact, so that when you get the bill sent out, you're not getting bombarded with questions about your billing. So in your fee agreement, it's worthwhile to just list who your billing contact is if they have any questions about their bills or making payments. The other thing you want to lay out is what payment methods do you accept. Credit cards are definitely the way to go these days. But if you're going to take cash, do you take wire transfers? If you do wires, are there fees associated with the wires? So think about those. The other thing on credit card payments, whether you work with, we do a lot of work with LawPay, and a new one is called Gravity Legal Payments, another great company. But inside of those two platforms, you can actually exclude certain credit cards. I have a number of clients that do not like to take American Express because the fees are higher. So that's something that you do have the flexibility to adjust. The other thing we want to lay out in this fee agreement section is the concept of a retainer, of a trust retainer. First of all, will you be taking a retainer up front? And does the client understand how that retainer is going to be used? Right? Sometimes I feel like clients feel like that's when you put a number in there, that this is your retainer or your trust deposit, they see that number and think that that's all they're ever going to have to spend on the case, which isn't true necessarily if it's an hourly case. So you have to make sure they understand that. And if you're going to implement replenishment of retainers, which we refer to as evergreen retainers, you have to cover this as how you're going to implement this. What is their minimum balance that they have to keep in their trust balance, in their retainer balance? And will you require to keep a credit card on file so that you can automatically replenish the retainers? We have another number of clients that do that practice where we do get the credit cards on file. And if you work with a credit card system that, like a LawPay or Gravity Legals, you don't have to store the credit card information. This credit card information is stored inside of their platform, which is the ideal way to go. The other thing to cover here is if it's a flat fee billing matter, explain up front, what does the flat fee include? Are expenses going to be billed separately and outside of the scope of the flat fee amount? So those are things to all go over in this section. The other thing that's worth bringing up in this section is if your flat fee deposit is going to be non-refundable. Is it earned up front? That's something to spell out here in your fee agreement, because if it's earned up front, you can deposit that money directly into your operating account. The second section, one other thing about fee agreements. Fee agreements evolved over the years to now they're all electronic. So you're using HelloSign or DocuSign or something to send out your fee agreement these days. But what can happen with that is that you're not actually sure that your client's reading all these sections that are so important. So when you're preparing your fee agreement, it's worthwhile to add an initial box next to the sections of the fee agreement that you want to make sure they really read. So keep that in mind when you're sending out your electronic fee agreements. The other thing I want to talk to you about is when we're talking about a billing, there's certain things we have to collect up front when we create the matters to help facilitate a smooth billing cycle. One of the things, hold on, I'm reading my notes here. I'm going to refer to these as matters. Some places refer to them as cases. But we want to be able to collect information about the case in one place. We don't want to have to create duplicate entry of data. So one of the best things that's come up lately are these wonderful CRM systems that you can take your intake in and then have that data automatically transferred over to your law practice management software, so you're not have to double entry things. So some of the things to think about to collect with your billing in mind is, what type of case are we setting up? If it's going to be an hourly case, when you're setting up your matter, make sure your rates for everybody that's going to work on the case are set correctly. so that when the billing happens, you're not having to go in and edit rates all the time. If it's a flat fee case, make sure your law practice management software allows you to select a matter as a flat fee type. This becomes really important when we talk about the profitability of flat fee cases, and I'll get back to that in a minute. If it's a contingent case, you want to make sure you're able to note that and actually include what percent award you're going to get on settlement. The other one I like to talk about are pro bono cases, and I like creating a separate billing cycle category for pro bonos so that you're not necessarily going to be billing these every month, and you don't necessarily want them in your billing cycle, but yet you want to keep track of how much revenue or how much time you spend on pro bono cases for KPI reports. You know, how much time did you spend on that? Sometimes bar associations will actually use pro bono work towards continuing education hours, if you can report that. The other type of setting we use is bill at end of case. And all these ones that I'm going through here, where it talks about the defined type of case for billing workflow, inside of Clio, which is the product that I use the most, we use custom fields to set these up, because this helps us filter out what bills are going to be billed in batches. If you have a particular matter that you don't want to get billed till the end of the case, we want to notify that, because we don't want that matter showing up in your normal billing cycle every month and then having to pull it out or have it accidentally get billed. And then whatever other special cases you might have for your own law firm needs. Why I find it important to define the type of case is because it lets me batch bill better. So I can run a batch of bills for hourly cases. I could run a batch of bills for flat fee. I could run them for pro bono. I have lots of different, I have more flexibility now, which makes the whole billing cycle much more efficient. When you're setting up your new matters and your new clients, be sure you collect all the client information. Remember that this information is going to show up on your invoice, so make sure everything's spelled correctly, make sure the address has been added, but mostly those two things. And one of the things, because the worst thing you want to do is send out an invoice to a client that just has their name on it with no address information. It looks sloppy, and if it's not spelled right. One thing I want to point out as estate planning clients is how you set these up so that their names appear on the bills, because a lot of times you're doing these for couples, and you want to make sure that when you create your client in your data in your system there, that it includes both the spouse's names, so that when they get their invoice, it's not just showing the husband's name or the wife's name, that it actually shows both names. The other thing you want to set up inside of your matter is, I call them related contacts. A lot of the practice management softwares have these, but the one you want to really identify here is who should get the invoices. So when you do your billing and you send out your invoices, you want to get this invoice into the hand of the person that's going to get it paid, so you get it paid correctly, quickly. So when you're doing intake with your client, an important question to ask them is, who should be receiving copies of the invoices in addition to themselves. So you might have to send it to 2 people. The other way on that one is identify any preferred methods of communications. If for whatever reason they want their bills mailed, I don't know why I would want that, but some people do. I have a number of clients that we create a custom field inside the database that says, you know, method of sending bill is via email or via US mail. So just ask that question. So again, you're making sure that it's getting it into the right hands. And in our business, we are big on checklists. So I have a checklist for a new matter setup to make sure that we're covering all the bases before we actually start the billing process for those CAT cases. Sorry, I'm going backwards. All right, let's talk a little bit about retainers. We have found with our group of clients that the clients that do get retainers up front and replenish them are the most profitable law firms we work with. Their cash flow is amazing. So let's talk a little bit about the difference between a trust retainer and a general retainer. Trust retainers are retainers that actually get deposited into your IOLTA account and sit on your books as a liability. That's not your money until you've run an invoice and have earned those fees and can reimburse yourself for expenses. General retainers, on the other hand, are retainers that go directly into your operating account. So they're technically earned upon receipt. So we have two types of retainers. I'm going to focus mostly on trust retainers, since that's the one that we use the trust replenishments for as well. And when you're asking for a trust retainer, when you're signing up a new case, you have to ask yourself, how much do you really need up front? And my answer to that question is, can you ever really have too much? And the answer is really no, because you can always return the money if you don't use it all, which actually happens very rarely. Most of the time you're running out of retainers. I think you can all relate to that concept there. So don't be afraid to ask, don't ask for a $500 retainer. Really put it out there. Let them know how much you think you're going to need to cover the first couple months of this case. And remember, this is hourly. This is all hourly work. And in the end, it's going to save you a lot of time and energy if you get enough trust money up front, because you're not then following up on AR later. When you're back to the fee agreement again, and we're talking about getting trust retainers, make sure you understand, make sure the client understands exactly what a trust retainer is. This concept of a trust account is brand new to them. It's not terminology they're used to hearing. So it's worthwhile in explaining to them that it's money that you don't earn until you get a bill sent to them and apply the funds, and that if there's any left over, they will get the money returned. Lastly, we talked a little bit about evergreen retainers. Well, the other thing I want to add here is, if you're going to do evergreen retainers, which is really the minimum trust balance concept, that they have to keep a minimum balance, you may want to share with your clients like when they get an email that says, hey, it's time to replenish your trust balance to your minimum amount, it might be worth sharing with them a sample of the email text they're going to get related to replenishing the retainer after a billing cycle. Sometimes they get a little bit confused because they may get an invoice from you that says, here's your current invoice. We used your retainer funds to make payment. There's no payment due at this time, right? But you are due to replenish your retainer. So now we have to collect $800 to replenish your retainer. So that text in an email can be a little bit confusing to a client if you're sending that to them for the first time and they have not ever had that explained to them. So worthwhile explaining that. This one is collecting the retainers and the amount due. Here's a scenario. Let's say that you bill a client, the current invoice has depleted their funds. So now they owe $500 and they're due to replenish the retainer to $1,000. So when you're sending out their current invoice, you're going to send a message that says, here's your current invoice. We've used your retainer funds on balance. Your current retainer balance is $0, and you now owe $500 on the current invoice. And by the way, you are now due to also replenish your retainer to $1,000. So technically, you have to collect $1,500 to pay their current invoice and to replenish their trust. That's a lot of language to send in one email. And if they're paying by credit card, the problem with sending them a link to make this payment is you don't have the option of sending them a link to their operating account. Well, you do have the option of sending them two links. The chances of them using both links are slim to none, because you need a link to your operating account for the $500 and you need a link to your trust account for $1,000. I want to point out that Gravity Legal love this piece of their technology, talking about using technology to make life easier. They have it built into their system that you can send a client a request for $1,500 And when that payment comes in, it will automatically split the payment and put $500 into your operating account and $1,000 into your trust account. So if you do a lot of these scenarios, it's actually worth looking into the Gravity Legal. I am not sure if LawPay has this on their radar screen to do or not, but I do know that Gravity Legal does, and we're using that with a lot of clients. The next one, back to credit cards for replenishment of retainers. Just remember, you don't necessarily have to collect and store the credit card information. If you work with a credit card processing that you can easily recharge or process recurring payments, then you don't have to have the risk of storing any client information, which becomes an ethics issue, I believe, in some states. So that's why we like working with credit card companies that are used to working with law firms that give us this flexibility on that end. The other thing I want to point out, it goes back to your fee agreement, which is the foundation that we're talking about. If you do, and I'm going to point this out because I do have a number of clients that do this, inside of their fee agreement, they actually have a section where they capture the credit card information. So you actually have the opportunity to have that credit card information to make those trust replenishment payments yourself. So you're more in control of it with that credit card information. I'll just throw that out there as an option. Let's talk a little bit about what you do all day. How does your time end up on the bill and expenses, because that was one we don't want to lose track of, and what tools you have in place to make sure that all of your time is being captured. You would think about where you spend most of your day doing. It's doing emails, it's meetings, it's document prep, it might be hearings, it might be administrative work that's actually non-billable, but you want to capture it in your daily day so you know how much you're spending time on things like that. You might be interviewing potential new clients. That takes time. So think about capturing your time. We do this to get your utilization rate, which is a whole nother topic for another seminar, but something you really want to get focused on for everyone in your law firm is this utilization rate. How many available hours of the day are getting booked to billable work, right? And it's actually a very low number, quite surprisingly, but and you won't know that number unless you're tracking your hours. So in our business, I have 12 employees. We bill by the hour, and everybody documents their time daily. And at the end of the day, they run a daily timesheet report that at the bottom of the report, it'll show them how many hours they recorded on time that day. And we have limits that we set. So we want to make sure that they're billing at least 6.5 hours a day. And in capturing your time, let's use what we have available to capture it so you're not having to remember to go add time entries. If you're putting your meetings on your calendars or phone call meetings, you can go to your calendar in most law practice management software systems and convert that calendar entry to a time entry, okay? When you're composing or responding to emails, there's products out there that after you hit send on the email, it'll pop up a screen that says, hey, you just wrote this email. Do you want to record a time entry for that? And on what matter do you want to put that time entry? I tell you what, responding to emails takes a lot of time out of your day, and I bet doesn't end up on many bills. So we use Faster Law. There's a product called Chrometa. That's a good product. There's other products out there, but that one's worth investing in. The other products that are out there is during the day when you're working on Word documents or Excel spreadsheets or PDFs, you can have a program running in the background tracking how long you had a document open and you were working on it. And when you close that document, a screen will pop up and ask you if you want to record time for the work you just did on that particular document. A lot of law practice management systems have timers. One of the habits we have is we use Clio. We go in the morning and we create pretty much a daily to-do list under the activities page. And as we're going through the activities all day long, we're turning on and turning off the timers as we complete the tasks. And very valuable tool on that end. And of course, review your time at the end of the day. It's a lot to take in there, but it's really important to understand the need to capture your time so that the bills, so you can get paid for all the work that you've been doing. Flat fee cases. Let's talk a little bit about flat fee cases and why clients like them and why you might like them. Clients like them because it's predictable and it's a bit transparent, right? You like them because it's easy billing, and I have a lot of people say, well, I don't have to enter my time then, right? And a lot of people will say it's more predictable income, but it's only predictable income if you're signing up flat fee cases in an efficient way, right? And you're getting the efficient work done, and you're getting enough of those flat fee cases in every month. On the point about you don't have to enter your time, you actually really do have to enter your time, because you're not going to know how profitable a flat fee case is without capturing your time on those flat fee cases. And the other challenge is, if you're a new firm starting up, how do you set your flat fee case amounts? That's probably one of the bigger challenges. And I guarantee you that most of you are probably setting them too low. So how do we know what to do with our flat fee cases? You need to enter your time and track it. And when you're looking at your law practice management software and you're entering your time, you don't want that time to be billable time. It's actually non-billable time, because you're only going to bill for the $5,000 flat fee part of it. But you want to enter all your time so that you can run your reports, but you don't want that time to show up on a bill necessarily. So keep that in mind, but you still want to enter your time. Another note about flat fee cases is, if you set up your flat fee case to take, say it's a $5,000 state plan, and you're going to take $2,500 on signing of the fee agreement, and then at the delivery of the product, you're going to take another $2,500. They have to pay the last part of it. We have a lot of estate planning lawyers, and I'll tell you what they run into a lot is, after they've prepared all the documents, the clients drag their feet to come in and actually sign the documents, right? So you're not getting that last payment because the documents are never getting signed. So keep that in mind when you're setting up some of your estate planning flat fee cases, and exactly when you want to take delivery of the final payment, and time that better so that you're not waiting on the client who can be dragging their feet. The thing I like about flat fee cases is it forces you to develop really solid standard procedures, because these flat fee cases have to be efficient. It forces you to focus on the workflow and execution and delivery of your product. And then there's technology available out there to help you actually build these workflows. And Legal Boards is one of the ones we use a lot. Great product, where you can build the workflow for any type of different case and make sure that you're not letting anything fall through the crack. And it's repeatable. So every time you sign up another estate planning, you have the set workflow in place that you can assign to that case. So that's one of the things to think about flat fees that I really super like, is it does force you to think about workflows. Contingent cases. Why do you have to keep time on contingent cases? Contingent cases vary a lot, but one of the things you really want to make sure you keep track of on contingent cases are any expenses that you are paying for, making sure those get added. And if you ever have to submit a fee award letter, you're going to have to be able to submit how much time you actually spent on the case. We see this a lot with probate cases. So keep all those in mind. Okay. And these are just some things to think about if you're going to do flat fee cases. One of the things that I find with those is that I actually do expose you to a new set of desirable clients that maybe don't want the hourly case. So, but if you're going to attract those clients, you have to have a marketing platform on your website that does promote these flat fee services in a very attractive way and really outlays what I call packages of services, whether it's setting up an LLC might be a package, a flat fee package, different levels of estate planning, maybe flat fee projects, if you're doing evictions, things like that. So clarity, real transparency about your flat fee services on your website can go a long way to helping you be more profitable in getting more flat fee cases and delivering on those flat fee cases. Okay, this is a little bit about what do I need to measure on what data do I have to collect, and then be able to run reports on so I know that my flat fee cases are profitable. So we got to look at historical data. So as you're starting doing flat fee cases, the more data you capture is going to help you actually price your flat fee cases in the future. So one of the things we want to look at is one of the good things about flat fee cases is the collection history. The collection and realization on these cases should be close to 100%. The only time we see that fall off is in that scenario I talked about, some estate planning, when the client's dragging their feet to come in to do the final signing, which means you're not getting that final payment. The other thing you want to look at is what is your cost per flat fee matter, and that's not how many hours you put in it times your billable rate. That's more about the labor cost. So if someone is billing at $200 an hour, and they're on a salary of a certain set amount, that's your labor cost. The salary is your labor cost. So you want to think about what is your actual cost on those matters versus how much you actually billed on those matters. And then that can get you to your profit number as well. So keep that in mind. The number 4 item about billing and getting paid is sticking to a billing schedule. We're seeing a large increase in number of clients that are billing twice a month. And most of the clients that are billing twice a month are clients that actually have monies in trust, that are really being diligent about getting retainers and retainer replenishments. But whether you decide to bill once a month or twice a month, you have to be consistent with it. And it's really hard to let this slip off your plate if you're a really busy solo lawyer or small practice lawyer. So it's best to delegate this to someone other than you to do your billing. And when you're going to delegate this task, before you delegate it, as part of the delegation, creating an invoice checklist is going to be really important, because there's going to be certain steps you want to make sure happen during each billing cycle, such as when are draft bills created, when are they reviewed and due back, right? Do we have, what reports do we run after billing? One of the most important reports you want to run is your trust transfer report, so you know how much money to transfer after you have completed a billing. The other report that might be on that checklist is your trust replenishment reports. So in your billing summary, so there's a lot of things that happen during a billing cycle, more than just sending out the bills. It's also the aftermath of the billing process. So creating that checklist. And I think I have a sample of a checklist here. And I don't know if you guys are going to be getting a copy of this PowerPoint or not. We'll have to ask Joe at Legal Boards. But this is a sample of a checklist that we put together for clients that has detailed steps of everything that has to happen. And once again, we use Clio a lot, so you're going to see reference to Clio, whether it's Clio, Practice Panther, MyCase, or whatever lien law product you're using. It all can pertain the same way. So good to keep that in mind. The fifth thing I want to bring up on the billing is, this is one of my pet peeves. And we do a lot of invoicing for clients, and I see a lot of bills go out that have really bad grammar on them and bad punctuation that the lawyers just aren't taking the time to correct. I think that sends a bad message to your client. It's sloppy looking. It tells them that you might not care as much. Your attention to detail isn't great. But as a lawyer, your attention to detail has to be really good, actually, to build the confidence that you want to extend to your client. And that confidence is not only in your legal work done, but also in how you present your bills to them as well. So remember to check that. Have like when you're training new lawyers or paralegals, you should have a cheat sheet for them on your expectations of time entries. Like, create, every sentence begins with a capital letter. Do you use periods at the end of each time entry? Are you grouping time entries? So sometimes I'll see a time entry like for 0.9, but in the text of the description, they'll have, reviewed emails, 0.1. Prepared documents, 0.6, and then the last one might be, review documents with lawyer for 0.2, which all adds up to the 0.9. If you're going to do that, you just have to make sure that your math is correct. The other thing that you want to make sure you're doing is your time entries are a way for you to tell the story about how you're moving the ball along with their case, right? It's showing progress, that things are happening. If a client gets a bill with only one time entry, they're obviously going to see that there wasn't much done on their case that month or that billing cycle. But it's important for you to capture all your time and put it on the bill. If you want to not charge for the time, that's fine. You can always zero it out, but still showing the client that the work was done has a lot of value. And it also is valuable to let them see that you didn't charge them for those times. So we tend to make separate time entries that we want to zero out. In that place where we talked about grouping time entries, this is the case where you don't want to group the time entries so that you can intentionally zero it out. The other thing about sending bills to your clients is, are they getting regular information about the fact that they have past due balances, and do they have money in trust? So each invoice that you send out, when you build your invoice template, should have a section, we call it a statement of accounts, that will list any outstanding invoices and how much is owed on each of those invoices. And then the next section of the invoice template would show what's their current trust balance, so that they can visually see how much they have left in trust. So those are those things. And then the other thing we want to talk about is making it easy for your clients to make payments. And this has changed a lot over the past 10 years with credit cards becoming so widely accepted. And I think with COVID, it became even more important because mailing checks was really difficult if you weren't in the office anymore. You were working from home. And the checks were arriving at the office. We saw a large delay in getting those checks added to the bills in the law practice management software. And what would happen is we would send out an invoice to a client that showed a past due balance, but they would say, "Hey, I mailed a check 2 weeks ago. Why isn't that check on there?" Well, we find out where the check's stuck down at the office, which we haven't been to for a couple weeks. So a lot more firms started taking credit cards over that period. When you're building your invoice template, something to think about is in the footer of your invoice, make sure you add pertinent information about how they can make a payment. Listen all your payment options. If you're a credit card, go ahead and make sure you embed the credit card link to make payment. If you're going to do ACH, make sure you add the information for them to send the ACH payment to. And if you're going to accept wire transfers, make sure you include your bank information as well. PayPal, Zelle, and Venmo, I caution using those methods if you're taking payments into the trust account. I'm not even sure that Venmo will let you do that, but I don't know a lot about the Venmo other than paying my kids for stuff that they need paid for. And the Zelle one, we do see a more increase in Zelle, more payments going out via Zelle than payments coming in. The other thing about those Zelle payments I'll caution you on is, from a bookkeeping standpoint, because that's what we do, is those Zelle payments will show up in the bank account, and all of a sudden you have to remember to actually add that payment to the invoice that's in your billing system, right? So there's a little bit of extra work there when you see that Zelle payment come in, you have to actually remember to physically go apply that payment to the invoice in the system to reflect that. Okay, let's talk a little bit about billing metric reports. After you've done your billing, what do we want to measure about that billing cycle? This is probably my funnest part about billing, but I like reports. So one of my favorite reports is called a billing summary report. And I'm going to basically go over the Clio version of this report, but I'm sure this is available in other systems as well. We run this report so we can send to the lawyer a summary of every invoice that was created and billed. It also shows the amount billed by attorney, how much was collected, and that is going to be, the collected column is going to be because we used trust money to pay the bill, right? So we call those trust transfers. And then what new AR was created as a result of this billing cycle. So it's a nice report. The totals at the bottom are really what they're going to focus on is the amount that was billed, that's future revenue, right? That's going to be coming in. The amount that was actually collected during the billing cycle, which is your trust transfers, and then what new AR is created, because we always want to keep an eye on our accounts receivable. The second report that we run, which is really for audit purposes, is we want to run a report that shows by detail, by client, by invoice number, the amount of trust money that was applied during the billing cycle and that total amount. And we call that a trust transfer report. And that's the report that needs to be recorded in your QuickBooks, in your financial system. And that's the amount of money that has to actually physically be transferred from your trust account to your operating account. And having that report, we call it an audit log. So it has backup of that number, that dollar amount that you actually transferred at the bank. The third report we run is called a trust replenishment report. And this is a report that will list every client, actually I think it's by matter, the current trust balance, right? The amount of their minimum required and how much they're below their minimum requirement. So this is a report that we use as our control log for knowing who has to be sent trust replenishments. And it's anyone that has a dollar amount in the column that says below minimum trust balance. We do tend to review this report with our attorneys before we just send out replenishments, because if you're at the end of your case, they may not want to replenish. And they also might be ready to return any trust monies. So that's a great report to review before you automatically just start replenishing trust or sending out trust replenishment requests. The WIP report is after billing, we run the WIP report, which by now should be pretty much depleted because you just did a lot of billing, unless you've got contingent cases out there. But we like to run the WIP report after billing to see what didn't get billed at any time and if we missed anything. And then the last report we run is the AR aging report. And we do the aging report because it shows the columns. Remember, an aging report will show current, 30 days past due, 60 days, 90 days, 120, right? So we want to look at, what was new AR, what got created in the current column, but we also want to look at those current columns. Do they have really old stuff that's 90 and 20 days old? So that's a telltale sign that you're working on a client, doing current work on a client that owes you an invoice that's 90 or 120 days old. So to us, that's a red flag. All right, we want to red flag that client. We want to get on top of that right away with a phone call and get some payments made before you continue working on that another billing cycle. Sorry, I could grab a drink here. And then the last thing I want to finish up with is cash flow reports. Another fun report that I love doing. We do a lot of weekly cash flow reports, but is it focused on billing for a minute? What I want to focus on is what is on a cash flow report that helps you as a business owner. And one of the things that we're going to do, there's a lot of things on the cash flow report, but things that are going to be on the cash flow report that are going to help you, understand your business and your own billing cycle are a couple things. We track accounts receivable. So every week we're looking at your accounts receivable number, seeing it going up or seeing it going down. We prefer to see it come down, but after billing, it'll go up right away, right? Because you just did a billing, so we'll see that number go up. But 2 weeks later, we really hope we see that number come down. The other thing that we track on there are your work in progress. So what is future? And your work in progress is a prediction of future income, if you think about it that way. So that tells you how much you have available to bill on your next cycle. And then the other thing that I actually don't have on here, which I should, is what's your current trust account balance? How much money are you holding in trust? Because that's also a predictor of future revenue for the billing cycles. The other things that are on your cash flow report, actually, I'll bring up a view of one right here. It might be a little hard to see, but this is just a snapshot of a typical billing report. But I really want to point out at the top of it, we focus on what monies came in, and it's the current. We always focus. The current week is the actual numbers. The future weeks to the right are projection numbers. Okay. The bottom part where we talk about, see where towards the bottom of the page, if you're looking at my pointer there, we have the current credit card balances, which is valuable to keep an eye on as well. But we also have those work in process numbers and the accounts receivable and your current trust balance. So we're keeping track of these numbers. We're looking at them every single week as a predictor of future income, okay, for future revenue, which is at the top of the cash flow report, the top of the funnel. So that is the other thing on the cash flow reports that we like to keep track of. We didn't talk a lot about expenses or things like that, but we keep an eye on what's the current month-to-date revenue, and then what's your monthly nut. And a monthly nut, if you're not used to that terminology, is what are your fixed monthly costs that have to be covered every month. And any time you make revenue beyond your monthly nut, it is at you're ahead of the game. It's money in your own pocket. You know, maybe you can take a larger owner draw that month. If it's below the monthly nut, that means you got to step up your billing before the end of the month to reach that goal. So that's what those numbers are for right there. That was a lot of information to cover. I appreciate your time. And if you have any questions, we're happy to answer anything. I am pretty readily available via email, which is not on here right now, but it's on our website. If you go to our website, you'll find my email on there as well. Happy to help out if anybody needs any other tips or tricks for doing billing and improving your cash flow. Let me know. I'm happy to answer any questions. Katie, I'll let you take it from here, and appreciate everyone's time.